What's up everybody? Welcome to the Stocks channel. My name is Corey and Friday in the stock market we ended the week at brand new daily lows and we ended the week on a very large bearish engulfing candle. Are we heading down to retest the June lows or possibly even reach capitulation? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so I did update my chart on SPY and Friday we were down 1.17% and we did close below that critical risk level at SPY 390, so we instantly need to start expecting the bear scenario. So there's a lot to go over today and I'm going to walk you through exactly what I think you should be watching for, and then this should help guide you through the rest of the month of September. So the first thing is, it does look like the market wants to start trending down to retest the June lows, but I will caution you the market loves to fool the majority. This is the most obvious scenario, therefore I do not guarantee to you that it's going to play out because the market usually does not do what is obvious. So what I do think could happen moving into next week is, you can already see it starting to happen in Bitcoin, is that we are starting to take out the highs from Friday, which means the market is very likely going up here to fill this gap, which is right around SPY 389, and test the breakdown at SPY 390. So in the short term, I do think you're going to see a bounce, and then we do have FOMC on Wednesday. So if we get rejected from 390, it is very likely going to be a very quick flush all the way down to about 368. Below 368, we're very likely going to see capitulation as we take out the June lows and see a lot of people just running for the door, totally giving up on this market. So I do not favor the capitulation scenario, and I do not even favor testing the June lows at this time, but because SPY is below 390, we need to go ahead and assume that is the preferred scenario until SPY breaks back above 390. So I'm not trying to tell you I know what's going to happen. I'm telling you, if you're a price action trader, while SPY is below 390, you need to be prepared to see SPY down here at 368, and it's really that simple. SPY below 390 is a very fragile market, and you can look at the weekly candle and see it's a very bearish engulfing candle, so it is a very risk-off market at this point. If SPY starts breaking back over 390, there's still the possibility that it's a lower high and that we still come all the way back down to this target at 368. So even if we get a bounce in the short term, as long as we're below the 50 daily moving average, as long as we're below the 20 simple moving average, and as long as we're below our resistance trend line, which is a negative slope, it is possible these are all just lower highs before the next lower low. So keep in mind the market has a lot of downward momentum and you need to respect that as a price action trader. And if you are a long-term investor, you can continue to accumulate as we make legs lower, knowing that you're holding your position for 12 to 24 months at a minimum. Now do keep in mind, from the back test, we are now reaching the max drawdown that we had, which was the 2009 bear market scenario. And even in 2009, once we reach this max drawdown, the lows did stick, which means even in the 2009 bear market scenario, the June lows will not be taken out. That is just a back test, which means we cannot get sold on a story. We cannot get sold on this idea that the market bottom cannot go lower. So while SPY is below 390, you need to be open to the bear market scenario. So there are a few critical levels to the downside I want you to be paying attention to, and that is going to be SPY 385, 378.5, which is the gap close, and then we have the support level down here at 368.5 and the gap close right around 369. Those are all of your downside price targets, and they will happen very quickly if we continue to see selling. But as you can tell, the Bollinger Bands will need to start expanding to allow for lower prices, because right now the Bollinger Bands are stopping right around 381. So in the short term, if we see a bounce, those Bollinger Bands will continue to expand, and that will allow for the flush down to 368. Now in the event we get back over 390, you can instantly get more bullish, but you need to respect the fact that we are bearish as long as we're making lower highs and lower lows. And the next higher high is all the way back above SPY 411, which is a long ways away. So just manage your risk very carefully and don't take too many long bets, because we are in a downtrend of lower highs and lower lows. So right now the path of least resistance is still going to be lower in the stock market. Now there's a lot of variables on why we could see bounces in the short term, and I will go over a few of them. But some of them are as simple as stocks like Microsoft are already testing the June lows And because they are market moving stocks, if they start to bounce in the short term, that is going to allow the indices to go higher. So keep in mind, in the short term, we are very likely going to see higher prices and at least a retest of the breakdown of 390, but we need to be expecting lower prices while SPY is below 390 and while SPY is making lower highs and lower lows, because we follow price action and we don't have any biases. There is nothing biased about seeing this as a downtrend in that we are expecting lower prices. So we just need to go with the direction of the trend, and right now that is still in the downward direction. So for that reason, I have the arrow drawn because it does look like by the end of the month we could get down there to SPY 368. So that sets realistic expectations, and we will get rid of the downward arrow once we break the downtrend and break out of the resistance trend line, and then we can start to say maybe the market has reached the bottom and we're ready to start going higher. It's not until price action breaks the downtrend that we can say we're getting ready to go higher. So for the time being, we are going to assume that we're heading lower by the month end. On the NASDAQ 100 triple Qs, we were down 0.61% on Friday, and just like SPY, we are going to assume we are heading to lower prices by month's end, and in the triple Qs, that is very likely going to take us down to about 267.5. Critical levels on the way down are going to be right around 284, this previous low right around 280, and then it should start to speed up as we continue to sell off down towards 267. That does take out the June low because the previous June low is right around 271, so do keep that in mind. And the critical risk level that we broke down below that we need to get back above to get more bullish is going to be 293. Above 293, we still have the 20 simple moving average and our resistance trend line. And if we start breaking above that and breaking out above the daily high just below 311, then we can get rid of the downward arrow and start to assume we could be heading higher. But this is very clearly lower highs and lower lows, and this is very clearly a downtrend. So do expect to continue to trend lower in the month of September until we break through resistances. On the Dow Jones, we were down 0.74% on Friday, and in the Dow, we have downward prices by month end that could take us down to about 293.5. Now to the downside, we have critical targets at 305.8, 298.7, and then that price target at 293.5. And if we continue lower, we have the gap fill all the way down there at 285. And as we do know, most gaps typically do get filled. We just don't know when. So if we continue to sell off, that gap fill is a real possibility. So do keep that in mind. Now to the upside, we have this gap fill right around 309, and the critical resistance that we broke down below, which was our critical support, is now 312. So we can get more bullish above 312. But we still need to respect the fact that we're very likely still just making lower highs and lower lows as long as we're below about 319 to about 325. So keep that in mind. All of the indices are making lower highs and lower lows, and while we are very likely going to get a bounce in the short term, we are very likely still trending lower. On the Russell 2000 IWM ETF, we were down 1.45% on Friday, and if I zoom out, you can see the small caps are still relatively the strongest because they are still above the support trend line, and they have not yet closed below the September lows. So this is very interesting because the small caps could be telling us that things aren't as bearish as they look, and we could be seeing a rally in the short term. Now the small caps have this critical support right around 178, and if that breaks down, we'll be looking for 174.7, 168, and then just below 164 to retest the June lows. To the upside, we have the gap fill at 181 and strong resistance right around 186. And if we could break 186 and then break above the daily high just below 190, then we can say the downtrend is over and we could be heading into a more bullish scenario. So just respect the fact that the small caps could still be breaking down and they're just lagging behind, but without a doubt, they are looking relatively the strongest. On the ARKK ETF, we were down 4.76% on Friday, getting rejected from the 50 daily moving average and back below all of the moving averages with the price action, and right back to this support right around 42.5. On a break of this support, look for a retest of 40, and below 40, look for a retest of the June lows at 36.5. So as you can tell, the market is still trending lower, and the ARK ETF will still need to break back over 46 and break back over the gap close at 47 to start looking more bullish. Otherwise, this was just a lower high before the next lower low. On the VIX, we were up 0.23% on Friday, and we are seeing the VIX struggling very hard to break back over 27, but I continue to warn you, as long as the VIX is above 24, it's still going to be a very volatile market, which does favor the bear market scenario. The bulls need to see the VIX crushing below 24, and then we can get more bullish as the VIX crushes down to close the gap at 21. So stay cautious while the VIX is above 24, because above this level we could still see the VIX spike back into the 30s and possibly even higher and continue into the bear market. On Bitcoin, we're currently up about 1.4%, and Bitcoin does look like it is continuing the bounce that started at the end of the day on Friday, and we are taking out the high of Friday's candle, coming all the way back up to the 20 simple moving average. So without a doubt, Bitcoin is starting to tell us in the short term we should be expecting some type of relief bounce, but that doesn't guarantee it's not just going to be another lower high before the next lower low. So on Bitcoin, we need to zoom out and we need to see the critical support that needs to hold is right here at 19,000, or the next leg lower will take us down to 17,000. The bulls need to get back over 21,600 and break the resistance trend line just above 22,000. And then Bitcoin will look like it has a higher low, higher high, starting into another bull trend. On Amazon stock, we were down 2.18% on Friday, and we did lose that critical support at 125, so that does mean we could be trending down to about 115. To the upside, we have a gap to fill, so we could go higher in the short term before we go any lower, and we're not getting bullish in Amazon until we break back over the resistance trend line, which is going to be right around 132 to 133, and then we could start taking out the previous daily high just above 136. As you can tell, this is lower highs and lower lows, so we do have a downtrend in the short term, which could be taking us all the way down to retest the June lows for all we know, which could be taking us down to 102 with the next price target on the way lower right here at 115. But as you can tell, these Bollinger Bands will need to start expanding to the downside. Otherwise, we will not see price action heading lower. So pay attention to the expansion and volatility as the Bollinger Bands expand, which does mean we could see higher prices in the short term before we see any lower prices. Watch that resistance at 125.7, 128, and the 50 daily moving average at 129. On Microsoft stock, we were only down 0.26% on Friday because, relatively speaking, Microsoft has been very weak and it was leading the way lower, which did give us a hint with a market moving stock heading lower that the indices were likely going to break down. Now, this is where things get interesting because Microsoft is already testing the June lows, and we did see buyers stepping in at that level. So the question from here is Microsoft going to break down and start trending down towards 230, or is it going to double bottom off of 242 and start rallying all the way back into the 260s and 270s? Watch price action to know, because a break of 242 will tell us it's heading lower. But if we bounce from here, you're looking for a bounce all the way back up to 252 and then all the way back up to close the gap at 265 and test resistance at 268. On Nvidia stock, we were up 2.08% on Friday, so Nvidia does look like it's running out of sellers and finding support right here where we would expect, which is right around 129. You're instantly risk off on a break below 129, but you can be risk on above this level, with the next upside resistance right around 134.6, the gap fill at 141.8, and the resistance at 145. On Tesla stock, we were down 0.13%, so not much on Friday, and Tesla is still struggling around this resistance around 305, and it is still holding the support down here right around 297. So the trading range on Tesla is about 297 to 305, and it's very simple. You're getting more bullish above 305 and then 309, and you're getting more bearish if we break below 297 and then down below 289. 289.5 is the gap close, so that could instantly act as support. And if we lose that support, look for a retest of 283. On Apple stock, we were down 1.1%, and Apple did break down below the support at 151.5 and did find support near the lower Bollinger Band right around 148, which is just above our support level at 147. We could get rejected from 151 and still go all the way down to 147, so keep that in mind. And we're staying risk off as long as we're below 151 and below 154. So you can't get bullish until we can start to see some type of positive bounce from a support level. As you can tell, we have red candle after red candle, which does make this a falling knife scenario. So be very careful trying to catch the falling knife unless you're setting a risk down here at 147. On the financial sector, we were down 0.9%, and the financials did bounce off the support trend line with a very hammer looking candle, which does mean we could see a bounce in the short term back up to retest resistance at 33.5, but you're instantly getting more risk off on a breakdown below about 32.8. Keep in mind we have a huge gap to fill to the downside, so that could be where we're heading if we do break down. The industrials were down 2.09%, losing that support just below $90 with that huge gap to fill to the downside, but we also do have a gap to fill to the upside. So in the short term, we could see a bounce to fill the gap to the upside before we head any lower. The healthcare sector was down 0.28% on Friday, still closing below all the moving averages, but also still holding this support level right around 126. The next bull breakout will be the break above 130 and the resistance trend line at 132. The energy sector was down 2.13% on Friday, breaking down below the support trend line, which could tell us that this was just a lower high bounce before the next lower low, which could take the energy sector all the way down to fill the gap at 69 and possibly even lower. The next bear breakdown will be the break below the 50 daily moving average just below 77. So jumping back over to the S&P 500, this is definitely looking like seasonality is playing out, with the second half of September being very bearish, which means we could go all the way down to retest the June lows while SPY is below 390. Keep in mind, nothing happens in a straight line forever, so in the short term, it does look like we're very likely going to get a bounce, but that could still be a lower high before the next lower low. We'll get a lot more bullish if we can break through all of this resistance and break the trend of lower highs and lower lows. But as price action traders, we need to respect the fact that this is a very strong downtrend and the market could be very fragile to a very quick sell-off to fill the gaps to the downside and retest the June lows. So manage risk very tightly during this very volatile market, or just sit in cash and wait till we have more clarity. Also, don't forget I still have 50% off your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, to claim 50% off your first month of bank. I think now is the best time to try bank trade alerts, and you can find out more information and learn how to subscribe by clicking on the link in the description of this video. If you're looking to become a better price action trader, consider joining the Stocks Channel Trading Discord community, where you get all of my intraday updates and analysis. You can find out how to join the Stocks Channel Discord by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.